Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor, and welcome back to another video on how to invest in real estate in Germany. But today's video is going to be about those two most frequently asked questions which I have been getting a lot in these days, and I'm sure that these questions are wondering in everybody's mind out there who are planning or trying to buy a real estate for themselves or for investment purposes. So now, to answer those questions, I have to give you guys some content, right? And from here on, whatever I'm saying, guys, this is based on my personal opinion and my analysis, and based on the projections made by different banks, the Baufi team from those banks, the Baufinancierung teams from those banks. So these projections could be wrong because these are just projections, okay? So take this information as knowledge and not as just some fixed facts, but the result could differ in the coming years. So let's get started. Okay guys, so the first question, which I'm sure is the most common question in everybody's mind who are either planning to buy real estate for themselves or for their families or for investment purposes, is that is it the right time to buy real estate when the interest rates are rising? Okay guys, now to answer this question and to explain my opinion, I would have to give you guys a context. Yeah. And for all those beginners out there who are watching this video, I would like to start with the basics. So now, why the banks are raising the interest rates? Okay, now this inflation Europe didn't see since last 30-40 years, yeah, above 8%. So now what happens? When the interest rates are pretty low, in case of Germany, below 1%, yeah, in case of US also, almost 0%, the interest rates were pretty low. So what happens when the interest rates are so low? It increases the borrowing power. By that I mean that people are not hesitant anymore to borrow money, take more debt. That means when they take this debt, they would like to buy something. And when they would like to buy anything out from that debt, let's say about house prices in this case, so the house prices will automatically increase because the demand and the people have more money to buy houses is increasing. Okay, so the demand, simple economics, demand is increasing. Everything related to prices, guys, is simple supply and demand. That's it. So more borrowing power, people have more money, increases the demand, house prices increased. Now, in case of this inflation is global, not just house prices. Every price is increasing, and the most important here is the oil price, because oil prices are affecting many other prices in turn because of the transportation cost and the supply chain issues, because the ships who are carrying all the supplies, be it components or food or whatever, have to sail at a lower speed to save fuel. Yeah, so the oil price is actually affecting the majority of the commodities out there and many other goods. But anyways, that's a different story. So when the interest rates are low, the borrowing power increases and the demand increases. Now, that's why to fight the inflation, to combat this inflation, the only effective way is to increase the interest rates. And that's why the banks have decided to increase the interest rates, because that will reduce the borrowing power, that will reduce the velocity of money, that will reduce the money in the economy, and people won't be able to borrow money so easily because they would have to pay more interest on their loan, on their debt. And that's why that will affect the demand and the supply ratio. So basically that's the scenario. Okay, now normally in a normal macroeconomic situation, when the interest rates are rising, the demand should lower down for real estate as well, and the prices therefore for real estate should reduce. But this is Germany, guys. Not so easy. In Germany, the macroeconomic situation is a bit different. Now, to explain that, I would like to quote some of the Baufinancierung research from different banks. And now let's get onto that so that you guys see what's going on and why, in my opinion, yeah, what conclusion I can make from these articles and from this research is that the prices of the houses won't come down so easily. Okay guys, so this is the first article. This is from ING DIBA and this was released in March 2022. So what this says is that demand for housing in Germany is high and we expect house prices to continue to rise in 2022, which it is rising, albeit at somewhat slower pace than in previous years. So I agree with that the prices will rise but at a slower pace, and that is because of the rising interest rates. Okay. But stagnating supply, high material and construction cost, and the fight against climate change will continue to drive up the house prices in the coming years after a 12.2% increase in the fourth quarter alone of 2021. This is huge, guys. A 12.2% in just one quarter. This is huge. Yes, this is too much. And I'm not in favor of this price. I'm not so happy that the prices are rising at such an alarming rate, because that can create a bubble. But again, Germany is not in a state of real estate bubble, in my opinion. And I will get onto that in a moment. But I'm still not in favor of such a big, heavy rise, because this is not normal. For me, 12%, above 12% rise is okay within 4 to 5 years, or 3 to 4 years, let's say. Yeah, but this is too much. Anyways, so now why the prices are not going to decline in the future, in the coming years? The article explains it further, so let's get on to that. The first point here is lowest home ownership rate in Europe. The home ownership rate in Germany was 50.4% in 2020, marking the lowest ownership rate in European Union. Okay, of all inhabitants, 56% were living in a flat, while 44% were living in a house. However, strong regional differences exist. In cities, only 24% were living in a house, while in rural areas, the share was 63%. But this is not so important. 44%, 24%, and 63%. What important information we can take out from this is that Germany has the lowest home ownership in Europe, guys. Yeah, in Europe. So what this tells me is that, see, and this is what I'm trying to explain. So the demand in Germany might reduce because of the interest rates, and people might not be willing to buy the houses. I still doubt that, until unless the interest rates are going above 4 or 5%. So I still think that people would be buying houses at 3%, 4%, especially for the investment purposes. Yeah, if they are not stupid. Anyways, but let's imagine the demand will reduce for buying a house because of the rise in the interest rates. But there's a catch here. There's another demand factor in Germany. The demand in living in those houses or renting those houses. Yeah, the demand for normal people who cannot afford to buy a house, they still need a shelter, right? And I would have imagined that, okay, in time of coronavirus, this particular demand would have slowed down, because there were restrictions for the immigrants to come in, refugees to come in because of coronavirus. But now we have a war going on, guys. The number of immigrants are again increasing. And on the other side, we have a German law which is favoring the skilled laborers to come and work in Germany. So all this is actually favoring the immigrants to come in. And so the more immigrants we have, the more demand to rent those houses will be there. And that is why there's this another factor of demand which we have. Now, what the government can do to bring the house prices lower so that people can buy? No, because it requires construction, right? And they can of course not lower down the material cost. It's not in their hands. And the construction cost, they would have to lower down the labor cost, which is against the law which they made for immigrants, right? So in this case, the prices of the houses will remain high. But what they can do is make government quarters. But they can only provide a limited budget for that, and they can only provide a limited subsidy for that. So in that case, what government can do instead, like provide subsidy plans for the buyers. For example, Bayern Labo. Bayern Labo is promoting the buyers to buy houses. For example, if you are living in Bayern and if you want to buy a house for yourself, not for investment purposes, for yourself, and if your salary is less than 60,000 euros, you can still afford to buy a house, because they will give you 10,000 euros as a financial help. Yeah, 10,000 is your gift, let's say. And also KfW subsidy. So all these plans will become much better. So in this way, the government might help, which is of course helpful for us. Now let's move on. So don't get confused with the header, guys. High prices and low interest rates, because interest rates are not lower anymore. But I want to give you guys a simple information from this particular paragraph, okay? So in the fourth quarter 2021, house prices increased by 12.2%. year on year, as we just saw. And between 2015 and 2020, house prices rose by a staggering 39%. Okay, we can understand that from 2015 to 2020, the interest rates were pretty low, and that's why we had such a huge surge in the prices in the houses. But still, this is huge. And I do know and I do understand that after some time, after the recession is over, when the interest rates will be higher, yeah, and let's say it will take 3 to 4 years, sometime after these 10 years, let's say, the interest rates will come down again, and we will have such opportunities once again to sell, because this is a seller's market anyways. So As prices and lending for residential real estate are very strong, the Federal Financial Supervisory Authority (BaFin) has announced an increase in capital requirements for lending institutions as for February 2023. So this is what I want to do. This is one of the information which I wanted to let you guys know, that BaFin announced an increase in capital requirements because of such a high surge in the prices. They increased the threshold for buying and for getting the debts. Similarly, when the interest rates will be rising, BaFin can do the opposite. And this is what I want to tell you, that in one or the other way, government will help us to buy houses. The prices might not come down, but there will be other ways to buy the houses, okay? So rents have also risen by only 7%, let's say, in the past 5 years, which I'm okay with, yeah? So the rent index has increased, but you can of course increase the rent if you do some renovations, 10% in 3 years. And I will make another video that I have done a really good deal with my tenants for the new house which I have bought, but that's one other video for the next video maybe, yeah, in which I'm really hedging myself against inflation or any economic condition. So this explains why the price to rent ratio has risen significantly over the same period due to the house prices increasing, and owning a property in Germany seems to be less affordable than renting one. And this is complementing the first paragraph which we just discussed, that why the ownership is so less. So since 2010, the affordability of buying real estate has fallen continuously, although German households' real gross disposable income per capita rose by 15% in the past 5 years, and interest rates have been historically at low levels. Yeah, this has not been enough to offset the sharp rise in the prices. In addition to regulatory factors and high incidental purchase cost, yeah, the Nebenkosten were so high that Germany still didn't recover from that 50% ownership percent mark. And this is what I'm trying to tell you guys, that the ownership is so less, which of course means that the demand to buy houses is low because people simply can't afford. And with high interest rates, they won't be able to afford further. But then there is another demand, which I just discussed, that the normal people who cannot afford to buy these houses, yeah, they still want a shelter on their head. So basically, government has to promote to buy houses, and they will do something about it, okay? So overall, the trend is towards demand for more living space per capita and smaller household, and this trend is likely to continue over the next 5 years, according to German Federal Statistical Office, according to the spring report of the Central Real Estate Committee. So further, this article says that new accommodation has been mainly concentrated on small attic apartments. What's more, we expect overall demand for housing to remain high, yeah, for housing to remain high. Now, this is one of the most important things which I said that I want to take out from this article and give it to you guys, is this, because this is actually affecting the supply chain demand for real estate, yeah, and the inventory in the real estate market. So building permits have been exceeding completion for years now, and therefore this is creating an imbalance between the supply and demand. And the supply is drying up currently. Between 2016 and 2020 alone, excess demand of some 350,000 apartments has built up. From November 2020 until November 2021, the construction of some 400,000 dwellings was permitted, not finished, okay? And due to low construction activity and high building cost, which of course will be higher now because of inflation, in 2021 and let's say in 2022, the number of completions in 2021 and let's add 2022 as well, because these high building costs will be higher, might have been lower than in 2020, and in 2022 will be lower than 2021, when some 306,000 dwellings were completed, adding pressure to excess demand. Now let's assume that this demand, the pressure for the demand will ease off because of the high interest rates, but still this demand, we have two types of demands here. So these two demands, if one is lower, the other is building up because the one is lower. If people are not buying houses, we still need houses for normal people to rent and to live, right? So there's a big gap. So the supply is still limited if we add both. So there is one, it's two. If one is declining but the other one is rising, we still have a constant figure here, but the supply is still less. Agreed? Okay. Now to finish off this paragraph, which is quite important, the federal government plans to build 400,000 homes annually, of which 100,000 will be publicly subsidized, though it remains to be seen how successful this plan will be. And this is what I wanted to point out to you guys, that there is only so much the government can do, and there is only so much budget for the government to publicly subsidize those apartments or those houses. The rest people have to buy. Yeah, and that is why I do think that there will be more subsidies, there will be more plans, there will be more financial help from the governments in the future if the interest rates keep on rising and they don't come down. Okay. Now, the other factor which is affecting the demand is regulation and other trends which might influence the house prices. So, we can see that in regions where the market is tight, the German rental market is subject to regulation. This we already know, like for example in Berlin, the conversion of rental apartments into owner-occupied apartments requires state governmental approval. The rent brake has been in place since 2015. Yeah, allow landlords to raise rents by only 10% above the local market level, which I already told you guys. And then this is quite important, that one trend that will also have an impact on the German real estate market in the future is the green transition. The German government is strongly promoting energy efficient houses since some 16% of all green gas emissions in Germany come from building sector. And now especially with the new government, the green government, we will have this more into picture, and recent plans to become less independent on Russia, oil and gas could accelerate the green transition housing into action. The immediate action program 2022 will provide an additional 5 billion euros to promote energy efficient building refurbishment and new buildings, including social housing. However, political support could also become a hurdle, and all this stuff is saying that political support could become hurdle. All these plans might not come into action so fast, and there could be political hurdles, there could be bureaucracy, yeah, regulatory hurdles, and so on and so on, and therefore we still might have a lack of supply. And this will affect the house prices in the future again. So this is what I wanted to let you guys know from this article. Now, where I'm going to from this all information, where I'm getting onto this question: is it the right time to buy real estate now when the interest rates are pretty high? The answer is yes and no. Why? Now, first of all, no. Why no? Because, for example, if you're buying, in this case, it's a no. When you're planning to buy a new house or a house for your own self where you want to live, in that case, I would definitely not buy a house right now. And especially when the ECB came out and said that they are going to raise the interest rates by 0.25%. So this is going to be higher. Yeah. So the high interest rates and the high demand, the prices of the houses are not coming lower in 1 quarter or 2 quarters. So if you think that the interest rates, oh, the government is increasing the interest rates, now the prices of the houses will come down in next month. No, that's not how it works. Okay, it might take 1 or even 2 or even more than 2 years for the price of the houses to come down because of this factor one alone. But there are other factors as well, like I mentioned. So if the interest rates were going to affect the house prices, this effect in normal situation also won't come drastically, and the house prices won't come down drastically within a month or two or even 1 quarter. Okay, so this is why I do think that for now, when the interest rates are pretty high, and it will become higher, yeah, after the ECB announced, I do think that high interest rates and high prices due to inflation, the new houses which are being constructed, the cost will be pretty high. So there, I don't recommend to buy a house because these two factors are making your buying quite expensive. Now, on the other hand, if you are planning to buy an old house where there is no construction or labor required, still the prices might be high because it's a seller market, but it won't be that high as the new house, or let's say the energy efficient house. Yeah. So there I am between maybe yes and no. So maybe I will buy a house in that case. Now, where is the yes? Yes, for sure I will buy a house if I am going to rent it out. And when I talk about investment, I'm not talking about flipping the house. Yeah, or buying the house for 10 years and selling it, something like that. No, that's not my strategy of investment. Okay, so what I'm saying is renting out your apartment. And now, for example, if the interest rate is at 5%, but I am getting a house which is yielding me through its rent above 7% or 8%, then I would go for it. Why not? Yeah, because anyways, I'm getting a 3% of profit on my yield, right? And who knows that you might not get this deal. So I would definitely not miss on it. And anyways, then I would plan a 10-year Zinsenbindung. That means I will fix my interest rates for 10 years. And who knows that after 10 years, I would get a much lower interest rate and I can refinance my house and then my yield will rise automatically. Yeah. And also such properties, I don't want to miss out. Above 7% is huge and you don't find such properties now these days. But all my properties are yielding me above 5 to 6%. And the new property which I bought is yielding me more than 7%. I will make a video on it soon. Maybe next video would be about it. So in this case only, I will buy a house in such macroeconomic situation. So that's your answer. And I hope this helped. Now, coming on to the second question, what is the future of real estate in Germany? Is it even worth investing in Germany, or should I buy back in India or something like that? I will talk about Germany alone. And to give you guys my opinion, I would go on to an article from Deutsche Bank that would back me up with my theory. So guys, the heading of this article is quite interesting. They say that house price cycle could end in 2024, which simply means that the rise in the house prices could end in 2024. Now, this is quite interesting because this could be another opportunity for those who are willing to wait for 2 to 3 years to see that if the house prices are coming lower or not. Because trust me guys, buying a house is not a small decision. You're not buying a pencil. So you would have to concentrate and focus on your expenditures and your income. Yeah. And this might be your chance that the house price cycle might come down. But there's a catch here. Like I said, the demand is not easing off. Okay. So for years, we have predicted often against prevailing opinion that the price cycle would continue. Yeah. And in April 2020, due to coronavirus crisis, they thought that, okay, the price cycle wouldn't come to an end because they predicted that it will come to an end in 2022, which is not happening. And this is why these are just projections, guys, and these could be wrong. So keep that in mind. But there is a normal supply and demand chain issue, and which I already explained to you guys, which is quite easy to understand, quite simple to understand, which tells me that for sure it's not easing off so fast. Okay, but anyways, the cycle likely to remain intact in 2021, of course in 2022 as well now, thanks to low interest rate environment. But now the interest rates are rising, but still the cycle will continue because of the reasons which I gave you. However, our analysis suggests that the nationwide price cycle will come to an end this decade. Yeah. And despite all the uncertainty, we believe the cycle is likely to end in 2024. The fundamental supply shortage should ease off in the coming years, which I don't think, but okay. The supply means the supply for the real estate market, okay? The lower level of immigration during the pandemic is also a contributing factor here, but this is an article from 2021. The lower level of immigration because of the pandemic was a factor to be considered in 2020-2021, not in 2022, because that is easing off now. In fact, we have a war going on, so the number of immigrants are coming more and more. So that factor is taken out of the picture. So the demand is becoming higher and higher. Any remaining undervaluations due to the low interest rate environment will be increasingly eliminated if the price momentum remains high. That means if the inflation is high, then the lower interest rates will be taken out of the picture, which they are right about, okay? Which is happening right now. This increases the risk that interest rates hikes will trigger a wave of selling. But even without an interest rate shock, German residential property is becoming less attractive, at least compared to other residential property markets, which I don't agree with at all, because I do think there are many good opportunities and amazing opportunities out there in the German real estate market with limited inventory, unlike the US, yeah, where the inventory is crushing the roof. Yeah. And apart from that, in such a stable economy, still you are getting an appreciation of an average of 2.5% year over year. Look at India, a growth market. In last 5 years around New Delhi in the NCR region, the prices were declining, not increasing, declining. Yeah. And yes, we can say that the interest rates there are for housing loans are 7 to 8%, but that has been since years. Yeah. Anyways, so here I do see a stable and a good growth. And now you will see what Deutsche Bank is further saying, because that actually contradicts a bit what they are actually saying. So if the cycle does in fact end in 2024, yeah, we expect nominal house prices to decline for a short period of time based on comparable historical data. So there could be a cumulative decline of 5% over the next 3 years. if there are no further negative effects such as those caused by the economic and financial crisis. So they are saying that yes, if the interest rates are hiking, that they do predict that the house prices might come down by 5% for the next 3 years, which I have no problem with at all. In fact, like I said, that could be an opportunity for us to buy houses. But if house prices rise again at the historical average of approximately 2.5% per year following the correction phase, that means after this correction phase of a decline of 5% for 3 years, the historical average, which has been 2.5%, if after these 3 years house prices again catch up to 2.5% increment per year, we could see an increase of around 24% over the decade despite this interim dip. And in addition, with the rental yield rising around 4%, this 24% could be much higher. So this is what I wanted to let you guys know, that yes, the interest rates are rising, yeah, and people might say that the German real estate market is not that attractive. For me as an investor in the German real estate, I do think that German real estate market is quite stable and it will remain stable. This is my personal opinion, and that's why I am investing into German real estate market. So to answer the second question, what is the future of the German real estate market in the coming years? I do see a bright future. Here are the proof, and I will give you guys much more numbers in my next video of the new real estate property which I bought recently, and numbers are amazing. So we can find those amazing properties, we can find those amazing opportunities. We just have to keep our eyes wide open, search a lot, because I get a lot of questions, but again, those questions are for all newly built houses. So for the newly built houses, we already saw that the prices will remain high. Yeah, so this is why, guys, I don't want to make this video pretty long. I think it's already pretty long. So guys, this is all what I wanted to let you guys know. I don't want to stress this video too long, and I hope I answered those two questions quite efficiently, and I hope that you guys got the information and got the point what I wanted to deliver to you guys. And this is, guys, just again my personal opinion, and I'm making my decision based on these analysis what I have made on my own. And this is what I just wanted to let you guys know, that what I am doing and how I will be approaching the German real estate market. And I do think that investing in real estate in Germany is a really good opportunity, and it's a really good market for future. And even if you plan to sell your rental property or investment property after 10 years, you have no capital gains whatsoever. I don't know what the new government will do, but until now it is an attractive policy, and I am investing into real estate. If I can get the credit and if I can get a really good deal, I would definitely jump into it. These high interest rates are definitely not stopping me until unless I get a really good deal, which I don't want to miss out on. So that's it, guys. That's all for today. I'll see you in the next one, and that next video would be quite interesting for how to invest into real estate episode, because in that video I will show you guys and share with you guys all the numbers from my latest real estate investment in Germany. So see you in that. Until then, stay safe, stay healthy, and ciao.